Welcome to Investing for the Rest of Us. My name is Chester Johnson. I'm the co-founder of the Stockteamup app, and today I'm very lucky to have Dr. Stephanie Hairston on the interview today to talk about investing and accounting. Stephanie, thank you for joining me today.
Thank you for having me, Chester.
So Stephanie, correct me if I'm wrong, you're an associate professor at Georgia Southern, correct?
That's correct. Yes.
Awesome. So background about Stephanie and I met her at one of our investment clubs down in Savannah, and she's an avid investor. Kind of. But she's also an excellent accountant, so I was hoping to just ask her today about accounting and just what that means for you as an investor. So I guess, Stephanie, to start off, what should people know about investing and how it affects, let's say, your taxes when you're doing investing?
So the main way that investing affects your taxes is if you are investing in individual stocks. So if you're buying stocks on Robinhood or M1 Finance, Fidelity, wherever you buy your individual stocks, the main way it's going to affect you is, number one, if you sell them, that's going to affect you the most. The second way it's going to affect you is if the stock pays dividends. So if the stock pays dividends, you have to pay your regular income tax on that dividend income. If you sell your stock, depending on how long you kept it, that tells you about how much you're going to pay. So the longer you keep the stock, the lower your tax bill is going to be as far as a percentage of your gain. But if you buy it, today and sell it tomorrow, it's, not going to be too good for you. I guess the only way that would have really worked recently is if you bought Kodak like a couple weeks ago and then sold it.
I heard about Kodak going up, and then I don't know what happened after that. Did it keep on going up, or did it crash?
I think it crashed because there was some talk about insider trading, so they thought that the information was leaked, and some of the insiders, took advantage of that. So it was up for a while, and then I think it's back down to close to reality now.
Okay. Yeah, I saw that and I thought, I don't think I'm going to touch that. I haven't touched it for 10 years now, and I don't think I'll continue not touching it. In the news, everyone's talking about the splits with Apple and Tesla. From a accounting perspective, what does that all mean?
So from an accounting perspective, it means absolutely nothing. So essentially, so for example, I think Apple was trading at like $400 a share. So if you owned one share of Apple, that one share was worth $400. After the split, now you own 4 shares of Apple that are each worth $100. So in overall terms, your position hasn't changed. You just have more shares now. So the real reason for that is for people who are not yet investing in Apple. So it makes it more affordable so more people can invest in it. So eventually a stock split can benefit you, but the immediate benefit, sorry, there is no immediate benefit. It's just a different way of looking at what you own.
Got it. So getting off topic, I have to ask, what are those things behind you? Because they look really cool, and I gotta ask again for the audience, what is that?
The things behind me, hold on. So, can you see it?
Yep.
So these are Funko Pops, and they are a publicly traded company. No, I'm not invested in them. But what happened was I went to a colleague's office, and they had like a few Funko Pops, and I was like, what are those? And they were like, they're Funko Pops. I was like, they're what? And so he was like, well, they have them for everything. I'm like, they don't have them for everything, but they literally have them for everything. So I have like a lot of Funko Pops. I don't even know how many anymore, but it's, the students like them. I like them. And they're relatively inexpensive. depending on how obsessed you get, you see I have a problem. So
That is awesome. I have to ask one more question about them. What is the coolest one you have?
let's see. Um, I think so. So, like I said, they have them for everything. So the most strange one I think I have is I have like the Coming to America Funko Pops. So it's Eddie Murphy movie from the 80s. So I have like Hakeem and or Prince, what was his name? Prince Hakeem
Yep,
and Sydney. I thought that was interesting. So I think those are like the most interesting ones I have
that is
because I never thought it'd be any Funko Pops from Coming to America.
that's coincidentally one of my favorite comedies. That is a hilarious movie. Everyone, I recommend watching Coming to America if you've never seen it. It's a hilarious movie. He's trying to find his queen, so he goes to Queens and
Yep.
in New York, and hilarity ensues. It's and Eddie, I think Eddie Murphy, and I can't remember the other actor's name.
We'll
They
see.
play multiple roles, right?
Yeah, well, Eddie Murphy, yeah, both of them I think play like multiple characters. But yeah, Eddie Murphy and Arsenio Hall. It's a really good movie. I highly recommend it.
Yep. All right. We'll go back to boring stocks now, I guess. So with everything going on from and from your accounting mindset, from my value investing mindset, I'm constantly nervous. From your mindset, how do you feel about the market overall as of September 2020?
I feel like the market is not reflecting reality. I feel like it's overvalued. But that being said, I think that when these times come, if you're already invested, the best thing to do is nothing. Don't take money out. And if you are putting money in, I recommend, dollar cost averaging, which means putting in a, set amount every month or week or however often you get paid. But as far as individual stocks, obviously the technology stocks are doing really well because currently, we're obviously not in a room together. We're using Zoom. And if you do buy Zoom stock, just keep in mind the ticker symbol is not ZOOM. It is something else, but ZOOM like shot up when Zoom went public and it was the wrong stock. So people were buying into the wrong company.
I think it's ZM, but double check before you buy into that.
Um, but currently, like when I invest personally in individual stocks, I'm always looking for bad news. So I'm looking for who's doing horrible. But do I believe that horrible performance? Do I believe it's because the company's terrible, or do I believe they're having a hard time? Um, but I haven't recently found any companies that I'm comfortable investing in.
Yeah. Yeah, I've said this in 4 videos now, but I'll say it again because it's just an ongoing drama. I sold everything. I bought in March for the first time. Believe it or not, I hadn't invested in the stock market for 3 years. I had this incorrect assumption that it was overvalued, and I was wrong until I was right, and it was too late. But I bought in March because I did feel it was quite undervalued at that point. I think I sold in June, July now, but I kept Tesla, and Tesla is something I wish would just go away in the news, but it never it just stays in there. And I've still held on to it. The thing that people always say is that it's just greatly overvalued, or maybe we fully don't understand it. From your perspective, just looking at the numbers, what's your thoughts on Tesla, or if you have any thoughts on it?
Um, I mean, I think Tesla, they make a good product. I mean, they have to if they're selling it for $70,000 and people are buying it. Um, Other than a few incidents of the cars having issues, I think the product is good. I think the leadership is probably questionable, just because sometimes the best thing for someone who's leading a company or anything really to say is nothing. And some people have trouble doing that. But that being said, if you look at the value proposition that you're getting from the car, so if you get an electric car, you're being environmentally conscious theoretically. You're also cutting your costs. Like I heard, or I was reading an article in the newspaper about the cost of ownership of an electric car versus a traditional combustion engine or gas powered car. So like you don't have to do oil changes. You are not going to have to do major um, engine repairs, or at least not for quite some time. So you obviously don't have to pay for gas. You just have to pay for electricity, which you're already paying for anyway. I do think that the value proposition is there and the product is good because Tesla, they're continuously updating their cars. Like that's something like if I go out and buy a brand new Mustang, next year the Mustang is going to be, better and Ford isn't going to, upgrade my Mustang, but Tesla can upgrade the technology in your car. And I think that's, pretty cool. And it gives your car longevity. Now, I think where they're going to start running into issues is when those batteries start dying in those cars and we figure out how much does it cost to replace one of those batteries. Um, but in, overall, I would say it seems reasonable.
The I'll put my engineering hat on for a second. Just for everyone watching, I'm actually an aerospace engineer by trade, but the combustion engine is literally combusting. You're setting a small explosion in your engine, so it will wear more. Uh, One thing interesting, I used to own a Prius, and I never had to change out the brake pads because you're using the electrical magnetic force of the brakes itself to slow down the car instead of a friction pad. So, yeah, absolutely. To your point, that your maintenance should go down, with the caveat that those batteries, you can tell they're investing heavily in it, not even just in the batteries for the cars, but in general. And it may be indirectly because of your point, because people don't realize that cost of that battery going defunct. I do. I had a Prius that went defunct because of the battery, and it was a immediate end to the vehicle. So, yeah, they definitely want to definitely invest in that battery, probably for that reason. So, good. What stocks are you interested in right now? What are you trying to find in right now?
So right now, I'm not really investing in anything. Like I did make um, a stock purchase a while ago that I would never recommend people like purchase stocks for this reason. So that's a disclaimer before I say it. So I bought AMC, the theater stock, when it was $2, and I sold it when it was like when Amazon they were allegedly in talks with Amazon about buying all the AMC theaters, so I sold it for like $8. So that was a good trade. But when I'm saying that, I want you to also realize that like back in the day, I bought Blockbuster stock because I thought Blockbuster is going to be around forever. So just take that into consideration when I tell you I bought, AMC stock and I had a good outcome, but there's the equal chance you have a horrible outcome, like I did with Blockbuster, where I lost all of my money, which was just $100 because um, but yeah, but like placing small bets like that every now and then, I do that. But mostly I'm investing in companies that I know, and I figure I try to put my investments where I spend my money. So if I go to Walmart, most people hate Walmart. Um, I love Walmart. I don't know why people hate Walmart,
Me too.
but I find it to be a very pleasant place. So I invest in Walmart. I have my cell phone is through Verizon, so I have to pay Verizon. So I figured Verizon should pay me, so I buy Verizon stock. So I'd say, for any beginning investor and even for an experienced one, think about where you're spending your money and what's the value that you get from doing that when you are looking to invest in something. So I don't just, blindly invest. I try to think about where's my money going, excuse me, And then I look at, the fundamentals behind that company. So are they profitable? Are they growing? Things that are quantifiable in their financial statement.
Absolutely. I want to definitely note that Stephanie, PhD, myself, I'm an engineer, and we don't tell anyone that we know anything about anything when it comes to investing. It is it is its own beast sometimes, and there are times when there is no logic involved with it, and there's no amount of smartness that will keep you from losing money.
It's true. It's true.
This is a perfect example. I think that everything is wildly overvalued, but I'll probably continue being wrong for another 6 months, because there's too much emotions of it doing well and missing out, and my thought process might be wrong as well. Things might be growing faster than my basic metrics are telling me. So you have to keep that all into.
But I
Main thing is, yeah, don't listen to us.
yeah, don't listen to us. But I don't think you're wrong. I do think things are overvalued. And from what I've been reading, part of the reason things are overvalued is because people are at home and they're bored. And so they're getting on, like Robinhood and some of these other free apps that are great for you, to start investing with. They're getting on there and they're starting to trade stocks. So we're seeing a lot more smaller individual investors that are driving the stock up based on, I like Netflix because, I can always find something to watch.
Yeah.
So I'm going to buy some, which is not a terrible thing to do, but I still say you should look at how Netflix is doing before you, put your money with them.
Yeah. I'll give you another side of that. I used to be a hedge fund manager for a couple of years, and we had momentum strategies, which really were eye-opening to me. And momentum strategies are very much prevalent on Wall Street. Momentum is going to give you more gain faster, and when you're looking quarter to quarter, it's very important for you to achieve that. So if you have, the retail investor going in and starting a little momentum, the Wall Street's going to go in and join in on that momentum. What's scary, and I do feel relatively confident saying this, is when the momentum ends, when the party's over, Wall Street's going to leave almost instantaneously. Oh, pretty much instantaneously. They are prepped to leave as soon as they smell anything wrong. So just be careful and don't put your emotions into it. Just you know realize that that's probably the reality of this current market is large swings up and large swings down. Yeah. Well, good. Well, Stephanie, thank you so much for joining me today and giving a little insight on uh, on investing and how it works in terms of accounting. Um, uh, Thank you very much, and yeah, really appreciate it.
Okay, well, thanks for having me, Faster.
Yep. Appreciate it, and check out more of our videos on the Stockteamup channel. Thank you very much.
All right. Wants to invest over the long term.
Yeah.
People don't see that. Like that's why I bought Blockbuster because it's like Blockbuster. What? This is like cheap. It's $1.
And now it's zero. Funny random tidbit of trivia. Supposedly, Kristen told me the last Blockbuster, which I think is in Oregon, has recently been turned into an Airbnb.
I've heard that.
No. As the last investor of Blockbuster, you have to keep up with that, right?
you know, and the saddest part was, so I thought Blockbuster, oh, it's gonna be around, but I was actively a Netflix member when I bought Blockbuster stock, which means if I had bought Netflix, which I was using, that probably would have been a little better.
Yeah. We all make mistakes though. I bought Bed Bath and Beyond thinking, oh well, this is just really undervalued. And then I was like, nope, it's really just being demolished by by Amazon. So I learned a lesson from that as well. I try not to. I don't always trust the numbers anymore. I mean, I trust that they're correct, but I don't trust that my assessment of them is accurate. likely because of your Blockbuster experience and my Bed Bath and Beyond experience.
But Blockbuster, like one of the things that sent them under faster was the accounting because the accountants were so honest. Like that almost like they were just um really, really by the book. Like there's always some gray area you can have, but they were so by the book and they were presenting such an accurate picture of what's happening that that actually drove them out of business faster. So that's something to be proud of as an accountant, I guess. So I don't know how to feel about that.
Accountants just constantly in the way, just